For many in the United States, and particularly in Washington, the shale oil revolution was meant to liberate America from Middle East oil. Instead, shale has brought independence from an unexpected region, Africa. As US domestic oil production booms, America is buying less and less from Africa. At the peak, in 2007, it bought 2.7 million barrels a day of crude from the continent. Now it does use 400,000 barrels a day. This year, Washington is on course to buy the lowest amount of oil from Africa in more than 40 years. And other regions have suffered far less. Saudi Arabia and his allies in the Gulf Cooperation countries are even selling more oil to the US than in the past, hitting now an 11-year high. The reversal in US-Africa trade has undercut the most important link between the two regions, just as President Obama holds his first ever US-Africa summit to promote business between the two blocs. I asked oil expert Amrita Sen why Africa has been so badly hit by the shale revolution.
The bulk of the production in the US is of very light sweet crude, and West Africa in particular produces pretty much exactly the same quality of oil. So as US domestic production has grown, they have reduced imports from West Africa, and that's why that's the region that's been the most hit.
The impact of the shale revolution is being especially felt in a handful of African countries, including Nigeria, Angola, and Algeria. But oil producers in the region have already found new clients.
What we have seen is that more and more of the West African oil is now heading to Asia. China and India are big buyers of West African crude oil as opposed to the US.
For Washington, this change not only has economic implications, but also military. A decade ago, the Pentagon was getting ready to play a big role in Africa to protect oil supplies. Not anymore. Shale has almost completely changed the economic and security relationship between Africa and the United States. Javier Blas, Financial Times, London.